So we're going to do another recap video or review of what transpired today, and I'm going to give some color not only in the ideas that we're going to go over, but what's generally going on with this market, why people are starting to have a tough time with it. At the end of this, I am going to walk through two possible short ideas that no one really asked me about today that I think are pretty glaring, but I'll go over that at the end in case it's not of interest. I'm going to run through this, looks like in alphabetical order, except for the short ideas, and including where the Qs are, because I want to go over the NASDAQ. But I'm just going to run through in alphabetical order. But I do want to talk about, where to get in some of these ideas, where to get out of them, and what transpired today. These are obviously my opinion, and you can take it or leave it. As always, please consider subscribing to this channel and turning on notifications, because what we're about to go over is extremely time sensitive, and if you're not notified about it and you wait like a week, frankly, what we're about to go over is going to be pointless. So APPS was the first one that I was asked to go over, and I just want to get right into this. We're in a trading market. The majority of NASDAQ stocks, the big tech, are going to continue to go up. That's getting pretty obvious, and you can see that with what we're adding to the newsletter, right? Apple, FNGU, Netflix is moving, NVIDIA. You can see where the money's going. So the secondary and tertiary names, second and third tier names, they're just not moving the same way. So let's just get into this. So what does that mean? Well, we have 33% less volume right now than we had 3 months ago in the NASDAQ, okay? And, I'll pull this up real quick so you can understand what I'm getting at. Here's where you are in April, okay? You see where I'm going with this? Look where you were volume-wise, right? Even if you go back to this volume level, and just to put this into perspective, let's just draw a line on it real quick so that you can see, right? See where I'm going with this? This is not above average volume, and this volume, as it's coming in, is less and less and less. I thought this spike the other day was going to lead to more buying, but it just hasn't transpired yet. We'll get into that. So when you have less volume in the market, okay, you're going to notice that the breadth of the market, if you look at the breadth of the market, advances, declines today, they're going to be higher. So the focus has got to be on understanding where your key levels are, meaning support lines, resistance lines, trend lines. You need to know where they all are on your stock positions, because the chances are that when you get to them, unless you're a large cap tech right now, that you're going to bounce off of it and that you're in a trading range. And that leads me to where I'm going with APPS right now. This looks beautiful, like it's setting up, and let's expose these other bells and whistles here. The 5 and the 8. You can see how we're pointing up in this close. In a stronger tape with higher volume, you would think that this is going to break out. Look how the volume is just falling off a cliff here, right? And this does happen when you go through corrections. You do have light volume, but the volume is very, very light here. So, until we break through this and close above these levels, I would not be chasing this. If anything, if you were to look at this and you are in this, the fact that you took out the low and then you rallied up here is an excellent side on the day. And let's blow that up a little bit so that you understand what I'm saying. So this is a hammer bar. I just went over these candlestick patterns and candlestick patterns that work, part of that trading like the Pro Series we've been doing. But you see this right here? I'll link that at the end of this. So you can see right here how we opened, came down, encapsulated it, and ran back up. This easily could have just been a bearish engulfing bar, right? But it's not. And this is a nice bar, and we have to pay attention to that. What I would just recommend, if I was long this, is just consider this, okay? You take out that low of this day, and you really have to consider how long you want to be in this stock. Because what you're seeing here is you're seeing massive rejection. We can put the bells and whistles back in now. You're seeing massive rejection at resistance lines on stocks, especially the secondary and tertiary names. So this is not a buy until I close above this. And it better be on volume that's like this, like huge volume. If it's not, expect it to reject and roll like it did here and here. And the other thing that you have going on here in APPS, just to point out, that line's a little too thick, don't you think? Let's just fix that line real quick and the thickness of it. So the other thing I'll point out here is you have a wedge that's just forming right here. So this is a really very strong resistance point. There's 3 layers of resistance right here. This upper trend you have to flip into, this lower trend on the wedge, and your resistance line. And I would recommend for new traders and beginners, leave these lines in at all time. Set alerts on these lines. It's simple to set alerts depending upon your system. You just click on them. That's it. I mean, any of them. Right? Create an alert. Boom. Touch. Alert created. So by setting them when they go off, it allows you to know it, and then you can be a little more proactive with what's going on. So I would not touch this until I can get a solid close above it on above average volume. Until that happens, I would avoid it. So this leads me to CAN. And this is one we actually traded and did very well with in the newsletter. And the newsletter's free, and there's a link in the bio and in the descriptions about it. But let's just walk through what's going on here, right? This is when we got involved down here. There's this wedge. Everyone's going to be in Bitcoin forever. They're going to benefit, and boom, 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 runs up, right? And you can see this trend right here. Okay? And this was pretty clear. We traded this. We made money. We blew it out of here, and I moved the stop to the top of this. The day that we closed below this, that was it. I said, get out, and we got clear of it. And I think we tried one more time to get back in, and it just failed. We tried here, and then we had the rising wedge, and then it fell down. What I want to point out is exactly what we were just talking about here. Okay, these support and resistance lines are everything right now, and that's where the focus is. And it's been like that for a week, probably closer to 2 weeks if you really look at it. And the fact that people are starting to catch on to that this is truly what's happening probably means that eventually it's going to reverse and just start blowing through some of these lines. But for right now, it's not doing that. So let's get rid of this rectangle. Let's get rid of this arrow. Let's get rid of this line because it's not relevant anymore. And let's just get into what's transpiring here on CAN. Okay, this is your lower trend line of your upper channel. Okay, it's broken. Okay, the high is the open. The low is roughly the close. It doesn't get more bearish than that. Okay, so for whatever reason that this is going down, it's going to go down. I mean, this is broken. That's a nasty red candle, and if you're in this, be prepared. This thing could go. There's no support here. Okay, you could go back to $7. People are like, well, how much lower can they go? There is no support here. The 21 is rolling, the 5 and the 8 are rolling. Okay, you have to get to your 200-day, which is 7.25, right where support is. You don't want to be there. So this is not something you want to be in. And look at how we just fell off a cliff here with this resistance. So let's get to. No, let's not do that one right now. I want to do that at the end because that's actually one of the short ideas. So let's take a look here at DraftKings. And let's just get rid of all the bells and whistles for a minute and see what's going on here. This is exactly what we were just talking about, right? Look what transpired today. We broke through the lower trend line. And I don't know if this goes all the way down. We can just take a look at that real quick and see how far that this goes down. Goes down to about, no, it's not really accurate. So let's just leave it right where it is. So what you're seeing here is a clear break and that dreaded H pattern. Okay, I've been talking about this for some time with this stock. March Madness is over, football's over. I don't know if adding the states is going to drive revenue. I don't know if this becomes a seasonality play. A year ago, this thing was named DEAC and was a SPAC before people even knew what a SPAC was. So, we haven't gone through cycles with DraftKings. We're not aware of where those cycles exist yet. So you have to keep that in mind, right? But you see this H? And I will go here and just so you can understand this. This is what I'm talking about. Very simple. This is an H pattern. Here's the H. Okay? That's what's going on here. Now we've broken that H, and you've broken this lower trend. Okay? A lower low tomorrow, and you're going to have people come in and continue to short this stock. And it's going to add pressure to it. There's no question about it. I mean, it's set up as a short. You have no support now. You don't have a 21 that's support. You don't have a 5, 8, 50 that's support. There's nothing there. You have no volume coming in. Okay, you're saying, the people that are looking at this right now are going to be out there going, and I don't really care if it's popular. I care about what makes us money. But you're going to be in a position here, and we can get rid of these now because you see they're not relevant, but you're going to be in a position here where these are going to start getting hit, and you can really get hurt here. This can come in pretty hard. So you have some resistance levels there, but not really. So don't be surprised when you break this to see this continue to roll down. Now, what would change my mind about this? Very simple, and we'll throw these indicators back in. If I don't take out a lower low tomorrow and I flip back over this channel within 3 days, if you flip back in a channel within 3 days, the trend is still intact. If you don't, the trend is no longer intact. So if you take that lower low out tomorrow, the probability of flipping back in the channel is lessened, and you're going to see people pile on. And now we're starting to talk about the 54 level, the 55 level. Okay, and realistically, you're looking at something more like 45 again, or maybe we hold the $49 on DraftKings. But this is not something that you should be rushing into right now. So as I stated in the newsletter, and again, the newsletter is free. It comes out 3 times a week. There's a ton of actionable ideas in there, as well as color commentary on the markets and which markets look good, blah, blah, blah. So just to put this in perspective, this was something we put in there. Then I was just asked about it today. So we've been in this. We actually got in cheaper than 33.5 the one day, and it's acting very well. So this is FNGU, and FNGU is simply a 3x ETF of the FANG names. It's the best way to explain it. You can go look at what the holdings are. You're looking at Amazon, Google, Netflix, etc., Apple. So what you see here is you see a clear breakout, right? Now, where's our breakout? It's right here. Okay, see this going straight across? Comes down, breaks, rallies, comes through, tests, breaks, goes. Okay, there's your breakout. Okay, so this is a 3x ETF, so it's a great way to get exposure to the market and actually have some juice in the return because of the 3x. So what we're looking for on the ETF, or where I'm looking for via the newsletter, is just for this to go to 44. I mean, that's really the trade. There's nothing to do here. It's acting exceptionally well. There's really very little support or resistance throughout this that I have to worry about. There's this 35 3/4 line, but that's not really going to be anything, because if you drill down into it, there's very little volume there compared to this buying that I'm seeing. You can see how we increased here on the volume. So expect this to push. I like this trade a lot. Frankly, this is a really simple trade now. You just buy it, and then if you break the low, you just blow it out. I'm probably even going to raise the stop on this in the newsletter. But FNGU is definitely something. I've been saying this with these names, and I'm not saying it to be disingenuous. I want Fisker to succeed. I want these things to succeed, these EV companies. When you have a stock that's out there trading and it has no revenues, people are going to sell the stock. These SPACs that came out, they're not generating huge amounts of revenue, if they're generating revenue at all. So when the crap hits the fan and they need to start selling stocks, they're going to start selling these kinds of companies. And these SPAC names are going to get absolutely eviscerated because there's so many of them, people have to clean them off their books. So they are going to have huge buying opportunities because big funds are just going to puke these things out. I mean, that's what's just going to happen. Now, that doesn't mean you jump in right now. And I'm definitely, let me rephrase that, I'm not jumping in right now. Everyone can do whatever they want. But see how we broke this 200 day today? I mean, you're going to $11. It's that simple. There's no support. There's nothing there. Let's draw it out. Let's draw it out. You have a level here that you're now through, right here, okay? There is nothing in here that's going to act as support until you get to this level, $11. And now you've broken the 200 day. So, and I've explained this before, as an institution, if you're an institution and you break the 200 day, there are a litany of funds that if they're in it, they just have to get out of it and wait for it to recapture it. They will not stay in it. So this should accelerate actually to the downside. As always, you could see it, reverse, but where would that become of interest? Look, if you defend 1550 and you flip back over this within 3 days, okay, then maybe you'll be okay. Maybe you'll bottom. But you can see what's going on here. I mean, 1, 2, 3. You've had 3 green days. These two were just hanging on by a hair. 3 green days since March 10th. I mean, in a month, you've had 3 green days. So it's just been, just straight selling. So I would not be a buyer of this. We could talk about it again when it gets $11. Fudo, it looks like we were talking about the inside week. This was on my top 10 list. Look, it did exactly what we've been talking about, right? It's going to start respecting this line here. And it's not going to be able to get through this until it gets huge volume. Now let's throw in our volume and let's throw in our moving averages. And for those that were interested in the RSI and been watching that RSI video and trying to get good at it, we'll throw the RSI in as well. And we can link the Trading Like a Pro series at the end of this, I think. So relative strength, oh, looks like I clipped it too much. Let's use the light blue. Okay. So really, you can just see how we're hitting here and we're not breaking it. You have to get through 160 and you have to stay above 160. And we're not able to do that. And I hope you can see what I'm saying here is you need to know where your lines are, because as you see these resistance points, they're just rejecting there. And it's across the board on anything that's a secondary or tertiary name. And it's a great trading market to do this. You just have to realize that when they don't break, you have to go. You have to get out of it. So let's look at this for a moment. But let's hold on one second. I did want to point this out. I don't think this is broken. I don't think that it's got a problem. If you really zoom in on this, and I wanted to point this out, this is very interesting, right? See this 50-day? Every time I touch that 50-day, it just bounces right off of it. So I don't think this is done, but you need to watch the fact that look at your volume. It's just gone away. After this, it's just completely dried up. So I really need that to come back in before you're going to push through these and stay above it. So let's get to this GBOX now. So this is one that's in the newsletter. And I gave another buy area yesterday, and I'll just walk through it. There's a lot going on here. So let's get rid of this RSI. So it's not really going to be overtly relevant for what I need right now. So this was our trade. This is where we bought it the first time, and we traded it up. And I stated when we got up here, just trim some off. I think we were up 30. It looks like 36%. I think I said to trim it at 32%. It's fine. Either way, we said blow some out and then just move the stop to the 16 level. And I actually said this yesterday, possible second entry coming. This is why it's so important, and I'm going to walk through how to do this trade. This is why it's so important to understand where these levels are and why these levels are there and why they exist, okay? These levels, they're all human behavior. That's really all it is. It's buy and sell levels, sure, but it's human behavior. And people are looking for these levels, and then when they get there, they act. That's why they work. It's why technical analysis works. If people didn't act when technical analysis was triggered, it wouldn't work. I mean, it's pretty clear. So it's 1607 is where we marked it. And what you can see is the bounce and support here, bounce and support here. And you can see this. Now, this is an hourly chart. You're probably not going to want to wait the hour. So I'm going to show you how to drill down into this and get ahead of this. But you see this wedge here, and then boom, then it takes off, and it looks great now. But how would you get in this? This is very not complicated at all. You drill down as low. If you're looking at getting in an entry point on the day, that you can drill down into a minute, but for our purposes, we're going to drill down into a 5 minute. This was really very simple. We knew this was our line because we had it there. As soon as you have this base here and you break out of this base, that's your trade. It's not more complicated than that. It's right across this line. That would have got us in at 1630, right on this 5-minute break of this base. This is your line. This is where you'd blow it out. Okay, if you cut underneath this and you break 16, you'd be out of the trade. It never happened. Okay, so 16 was the low and 16 stayed the low. It reversed and then it took off. But just by understanding where this line is and drilling down to a 5-minute chart, right? And people will say, oh, I don't want to buy it because it's under the VWAP. Okay, well, here's VWAP. I just threw it in. I don't care that this is under the VWAP. If you want to not buy it because of that, that's on you. But I can get rid of the rest of this. I don't care about that. I care about this support and resistance level, and is it going to be defended? So I understand people look at VWAP and they only want to trade on that. But if you look at, oh, I'm going to buy it here because it's above the VWAP. I mean, how'd that go? So, you have to look at it that way. I'm not saying not to use VWAP. It has its place. But VWAP is no match for understanding where your true support and resistance levels are on a stock. It'll crush it every single time because that's how all this other stuff is determined, by support and resistance level. So let's keep going. This is IDCC. You know what? Let me go back to this real quick so that I can explain this. I don't see anything here that's going to hurt me. I mean, I tested here and I ran. So for those that are in this, congratulations. I'd stay in it. I don't see any reason why this is going to roll right now. We've had 1 hourly red bar since we've tested here. 1. So that just tells you the amount of buying that's going on. Look at the average buying as we looked at the other stocks. Look what's going on here. Huge buying in this name. So I do think that that's one they just hold on to. This is IDCC. I don't know if we covered this before. It doesn't look like we ever covered this one. So let's drill this down and let's expand this out a little bit so we get a little more color on it. Go here. Let's add this. Okay. And let's throw in our indicators to see what's going on. Yeah, I mean, look, this is pretty interesting, right? There's not a ton of volume in here, but you're getting a lot here. With all this selling, and that's all we did, that's pretty impressive. Look at this line right here coming across. You've gapped up there, and look at this one too. This is really perfect. This is actually perfect. So this is what I'm going to show you on SI today too, and the SI trade that's setting up. So let's just open this all the way up so you can see where I'm going with this. So this is 69, and you come across there. We opened here this one day, and then we gap filled and tested this line. And then we probably bounced right off of it. So if I drill down into a 5-minute, that's probably what I'm going to see there. Then we rallied, tested it, huge selling came in, and we held the 5-day. This looks great. This looks great. I have no position in this. I think this looks really good. To me, let's get these drawings, collapse them. And we're going to go up here, take a look at this. Yeah, I mean, it rejected the 72.5 level. I mean, that's your resistance point right now. You're trapped between 69 and 72. There's really no reason to chase this until it gets through that 72.50. Let it get through this level. Let me just see what exactly that is. 72.81, it looks like. So let me just slide that over so everyone can see that. Yeah. So you're right there. I think that this has massive potential with this base. This base has been going on for 2 years, and look how deep it went. So this has massive potential. I would put this on my list, but I wouldn't touch it until we get over 72.75. KOPN, I was pretty clear about this yesterday. In the newsletter, failed 4 times. Consider closing the position and look for reentry. There was no reason to be in this, and I'm just going to show this pattern because it's a pretty important pattern. When you have, let's expand this out, and this is KOPM. When you have a wedge like this, okay, and you have here's your flagpole, and we can't get above it, right? Now we get above it, opens, closes, this is your wedge line. When you break this pattern and you come in and you break a lower low on this pattern like you did today, you're done. This is a classic short, right? Now, I didn't know that that was going to happen. I just wasn't crazy about this bar as far as why I pulled this out of the newsletter. But this is pretty clear that this is a rising wedge line. We broke that right here on 2 parts, and that was it, and it sold down. Our sign that we needed to get out of this was very clear to me, and it's not that hard to see. Okay, this is the 12 line. 1, 2, 3, 4, 5. 5 times it rejected that 12 line. If it's not going to break it, it's not going to break it. Why at 11 should I stay in a stock for $1? It makes no sense. There's no reason to stay in there if you're looking to make, real money on a trade. So with this break today, I would not go near this. If I was in this, this would be something that I would consider getting out of at this point. To me, it just looks a mess, and it's not something that I would want to be a party to. I mean, it actually candidly looks like a short here, so it's not something that you want to be involved with. And now you're breaking through, let's go to the weekly on this. Looks like we broke through a weekly resistance line. Maybe let's go to the monthly. That might be easier. Yeah. So, 982. So you're breaking through these levels, monthly levels. It's not good. So, it looks like we're heading possibly back down to the $7 range according to the monthly chart. So something to consider if you're still in this. I would be gone. Mara, look, these lines have been in here for weeks. Look what we did today. We went right to the top. And this is why it's so important to learn how to draw these lines properly and understand that this is not the line. This is the line. To understand how to truly draw these channels will change the way that you trade. And it's really important to understand that. Look at how this just ran. I didn't put, people that have been following me know I didn't just put this in here. Ran right to the top of it, rejected, came and closed lower. I would not touch this. If this breaks a lower low tomorrow, okay, this could be a short down to here. Okay, this could get ugly fast. And let's just look through the bells and whistles. Yeah, I went through this before. This 5-8 cross right here, this is not good. And talking about where we could go down to, for this to go back to 43 and test the 21-day after this rejection, and I guarantee you that if we expand this out and we throw in the Bollinger Bands, we're either through the top band or above it. Yeah, here's your top band, right? You hit the top band, rejected. So usually when you reject here and you reject up on this level as well, what does that mean? You're going to revert to the mean usually. So I would not chase this. I'd be very cautious of this here and the action. This was a failed breakout. So, and remember where these stocks were and remember where they were on the last rally, and I don't know how you justify where it is on a market cap basis, but right now you're hitting lower highs and you're not able to get below them. Take out this. If I was in this and we took out the 48 3/4 line, I would be concerned, and that would be, I would have concern. I'd have concern. We break 49.65. I'm going to be concerned tomorrow. So just watch that. It's not something that you want to be involved with if this breaks, because this could drop really fast down in here. These secondary and tertiary names, as we cycle through and people buy actual, value, and they buy the NVIDIAs of the world, the Facebooks, those kinds of names, these kinds of names just get blown out really, really fast. And I've seen it over 20 years. It's just the way it is, just the way it trades. These were just the lines from the, let me move this over. This was just me explaining that this is a 7-month base in the newsletter, and then it should break out. If it breaks this 745 level, a rejection at 575 could mean backfilling. Guess what didn't happen? We broke through it. So see the difference between NVIDIA, and let me pull this down so you can see that this is NVIDIA. See the difference between this being NVIDIA and how NVIDIA acted today versus how APPS, DraftKings, FSR, all those smaller names, Mara, look at the difference. This is where institutions are putting money to work. Now, the next line that this really has to get through for us is going to be here. And if we can't get through that, and you also have to consider this up here. So if we can't get through these lines that are up here, so the first one, 615, we could come back down to 575. At that point, the people that are in at 540 from the newsletter have to consider, do they want to go for that ride or not? And that's a personal decision. You have to figure out if you want to do that or not, or just, realistically, I'm just going to keep raising the stop to the 50-day as it keeps going up and turning, because the 50-day will catch up to it eventually. And if a close below that, you're going to want to be out of it. But it could run here. I mean, it's an 8-month base, so I want to stay in it. The cues, let's just do them now, and then we'll go through what I say. Look, the volumes, hardly anything, right? But look at how we're acting. And let's throw this back in, because this is kind of important on RSI. So, to apply. Okay. So what you can see here is, if you are looking at this level on RSI, you can see, and I explained this a little bit. I don't know that it goes all the way back to here. Yeah, it kind of does, doesn't it? So you can see that you're breaking this trend line up, right? And I walked through this in that RSI video, how to use this properly. But with that break, look at how we're setting up here. Came back down, tested, right? Lower or higher low. It's what you want. Through the 50-day, we're above the 5, the 8. The 21 is about to cross the 50. This is what you want to see. This looks great. We have that TQQ trade on. I haven't touched it. I'm just leaving it alone. I fully expect to break this level in the rally. Could we backfill before then? Sure. But I'm not overly concerned about it. I still think we have as I walk through in the newsletter, I still think we have 10 to 12%. I don't think people are going to be happy because they're going to be in the wrong stocks. I think that people are not going to understand what's truly happening here. That people are going to stop buying certain names and focus on the others. And this always happens when you have corrections. Always. So let's get rid of some of this stuff here. Let's remove all rectangles. And let's get rid of these indicators for a moment. So here's our rising wedge that we broke. Okay, we tried to get through that rising wedge today and rejected. Okay, and let's blow this up so that you can see this. So here's the rising wedge. We broke it. This is really, again, when you break this low, that's where you short it. Now up here, it's quite obvious people sold right into that line. And that's what I'm saying with these secondary and tertiary names. You need to learn how to draw these lines and have them in and get guidelines, because this is not going to stop anytime soon until you start seeing like record volume again. We're just going to be trading like this. And now you have this other wedge up here in this one. Now let's overlay these indicators with it. Okay, so I have the 5 and the 8 crossing down, which is negative. The 21, which I can no longer get above, right? I couldn't get above the 21 here, and I couldn't get above the 21 here. And meanwhile, these are going higher and higher, right? But what's happening while that's going higher and higher? Okay, so my RSI is dropping. So the magnitude of the move is going lower and lower, but the stock's going higher. It's called a negative divergence. It doesn't usually end well. So this needs to get above the 21-day as soon as possible. That puts us at 53.92. Let's call it 54. If you see a lower low tomorrow, you need to be aware. If you break the 50-day and close below the 50-day, which we have not done, even when we were at like 48 on Bitcoin, right? So, it's very possible for Bitcoin to go up in these not last month or from their mining. I don't know how that equates to their market cap, but it'd be nothing for these to come back in. So just keep that in mind. Focus on the larger cap names is really where I'm going with this. So today, I was pretty clear about this. We need to close over 176. If we do, you have another trade. Secondary name, guess what it didn't do? It didn't close above it. And a matter of fact, we actually settled right on this break line, didn't we? Right? So let's blow that up so that you can see where I'm going with this and why these lines are so important. Okay? You closed right on the line that I drew. I didn't put these in today. They've been there, right? They were there yesterday. And so we closed right on that. Now, what does that tell us? It tells us that it's respecting that line. So if I open and I go back into this line tomorrow, expect a test of 152. Okay, that's how you should view this move on SI. So if you break out lower low, you're going to 152, where you're going to test this wedge line and this support line. And again, I think it's important to note this. On this break, I expected the RSI to push through. It didn't do that. So the RSI actually, with this even making a higher high today, the RSI made a lower low. That's not what you want to see. I really wanted to see follow through today. I thought we might even get a trade out of it. I called it here, and I'm going to drill down on the 5-minute and show you the trade. So again, as I said, how you have these, see how this is rising. Let's get rid of these indicators for a moment. So you just look at this. When you know where these levels are and you draw them and you leave them in, it makes all the difference in the world. So look at this, okay? This was the gap fill. That's all I was looking for was the gap fill trade. What's a gap fill trade? When we break out on huge volume, usually within 11 days, the stocks will come back and try and fill the gap. It's a gap fill trade. It's not much more complicated than that. I'm not going to try to make it more complicated. So when we broke above it, I'm going, okay, here it comes. Okay. So I waited for confirmation because it's one of those kinds of markets. What is confirmation? Confirmation is a higher high close. Does that mean I have to pay up for it? Yes, it does. And I was willing to do that. I didn't get that. So I didn't, on Twitter, I didn't say that, okay, I'm buying it here. Now, what should be concerning just on the 5-minute is I have a rising wedge and I'm right under this gap line, which support flips to resistance. Bonk, bonk, bonk. I need to get above this 163.40 line as fast as possible. Hopefully it does that tomorrow and then continues. Again, if not, and we break this down, you got to go. That's just my personal opinion. But there it is. You're going to have to get out of it unless you want to go to 152, which could happen. And I think it'll hold 152. I think these things are going to just bounce around and hold these levels. And we're going to have to trade for a little bit like we did in 11 and 12. In 2011, 2012. So, when there are only a handful of movers. So, snap, you can see where I'm going to go with this right away. So, let's get rid of these indicators. Let's throw this out here. You went right to resistance today, 2 days ago. And what happened? It rejected. You took out a lower low today. Cannot touch this or buy this until it breaks 64.51. I mean, it's pretty clear that that's what you have to look at. 64.51 on this. Don't go near it. Let's put in the indicators and see what's going on. I like how this looks great. See this? How this is above and how it wasn't like that on SI. See how this is above this? That's what you want to see, positive divergence. All these pointing up, still respecting the 5-day. So this could push to this level up here. But I need a break of this line and a close above it, in my opinion, considering the market that you're in right now. 64.51 close or better before adding. So TIGR is a classic example. I added it today and we got stopped out, and then I added it again. And let's just go through the trade. So this was pretty clear that I have been looking for this. Let me get rid of one of these. I have been looking for this 20 close forever on this stock, just waiting for it. And a lot of the people that follow the newsletter, we've been in this one, have done exceptionally well with it. I think, we caught a double in it the first time around. Rallied up, rejected. Couldn't get above the 21-day. Started getting above the 21-day. Starts looking great. Boom. Rejected. Today, rejected. Why did I execute this when I executed it? Why did I put it in the newsletter when I did? I'm just going to show you the little pattern that made me do it. So let's get right into this so you can understand where it came from. So very clearly, when we were up here, right, this is 9:30 today, jumped, tried to get through it, couldn't get through it, jumped, got through it, confirmed close above the line and above this other bar. That's confirmation to me. And this little swing is confirmation of an actual candlestick pattern as well. 1, 2, 3, with an inverted hammer on top of it. And look at the volume that came in, right, on the day, on the 15-minute. So all these factors led me to believe that this was going to break. That's why I put the trade on. Not every trade works. So this didn't work. Now, where I got interested again was pretty clear. And let's get rid of these indicators. As I stated, it's important to have these lines drawn and leave these lines in, right? So as I go back, and let's go all the way to the weekly for a minute, okay? See the 17.99 weekly line, okay? And look at how we hit here again on this week. It's crazy how they're just respecting these lines right now. So this 17.99 line is a weekly line, and that's what I drew here, right? And that's what it respected today. Now, it respected it once, it respected it again. When I bounced off that line, and I'll just go to this real quick so you can see it. Boom. Okay? That was all I needed to see. And then this higher high bar gave me an indication this is not a bad spot to try and buy it, with this being my stop. So this was a pretty easy trade to jump in and then use a weekly support line as your stop. It's, even when it came back down here again, it tested it. And could it break tomorrow? Sure. But at least this gets me back in the trade in case we go back to this 20 line, because again, I think that we're going to be in these trading ranges. I got to start getting through these lines, and we're just not doing it. So that's that trade. So let's go through this, the Telray. So this was us before in the trade, and we crushed it on this one, right? TLRY, I think at one point we're up over 200% in the trade. We just absolutely crushed this one. So let's get rid of all this for a moment. Just throw all this over there. Let's get rid of all these arrows. Remove all. Just get rid of all of it. Get rid of all this. So I was asked today why I'm calling this a short. And I was pretty clear this weekend when I was asked to review this one. If you break this 21, you're toast. Okay? You're done. And you can see this little rally and fail, and that's exactly what happened. Now, what do we do about that? Throwing these indicators. Okay, you're below the 5 and the 8, and you couldn't stay with it. This was just rolling the whole way down. So in other words, this is going lower, right, than where we are here, which is a negative divergence to the low side. It doesn't matter that this is at 30 or 20. It doesn't really matter where this number is. It more matters, is it congruent with the action that you see? It's not. So you roll here, your 50 and your 21 are coming in, and we broke. Open, and you can see it, classic short, right? Let's get rid of the bells and whistles for a moment. Okay, the open was the high, the low is the close. I don't see, when I blow this up, I don't see anything except maybe here, and we'd have to look at how much volume that is at these levels. I don't see anything except maybe 15 that's going to stop this from going to 12 now. Anything. And the one thing that people always say to me, well, how much lower can things go? Look, last year this stock was $2, so it can always get worse than you think it can, and just kind of keep that in mind. So it really needs to flip above this 21 day, and right now it's just not doing that. So that's why I said I don't want those on. Let's get rid of those. So that's why I was saying that there's no reason to be in this. You got to get out. And to me, it was a classic short, and that's what it is. And that's about as bearish as a bar as you can get. So this was part of that candlestick. Let's get rid of all this, and let's get rid of all these segment lines. So this is Tesla, and I just want to point this out because I've been saying that you should be looking at these larger cap names, and I really believe that. I think that they're going to be the space where people are going to feel the safest. So if you look at what transpired here, you broke this wedge line and you ran through it. And now you're set up right on another one. And this is Tesla, and I'll put it in here so that people know. And I just really want to just show you this. And we can even do it. I don't even need I truly don't even need the candles. You can just do it on bars. So you can see where I'm going with this, right? So you've broken this trend line, and let me draw that a little bit better. So you've broken this trend line, okay? It's awful. There you go. So it's really important to be accurate with these. It makes so much difference in your profitability. So rallied, usually the first time we fail. You just remember that. Second time's the charm. So you can see how we are setting up the push here. Get me through this solidly, and you could see this have a NVIDIA-like move. There's no question about it. People want to be in large cap tech. They want to be in things that they feel, quote, are safe and that they can explain to their mutual fund holders at this point. That's not the SPAC names. That's the large names, and that's why you're seeing buying in them. So this is Tesla, and I would tell you to look at it. I like this close. Get above this close here. Get above 708.16, and I think that you'll start seeing a lot of buying coming in this. Put this on your list as one to buy, and frankly, it depends how you want to trade it. You can trade this with options fairly easy by just buying deep in the money calls instead of buying a $700 stock. But you can see where I'm going with this, right? I mean, like look here. Look where we're at on the RSI. The RSI is a leading indicator, not a lagging indicator. That's why I like using it. And this is telling you that we're heading higher. Flip the 50-day. Where's the flip 50-day? 720, and this thing's gone. It gets through that, and you're heading back to highs. So this has a lot of potential, and I would look at it. I think it has NVIDIA-like potential, frankly. You've been basing for a long time. Your base, if you go all the way back to here, is November to here. You can see it. So that's my feelings on it. UPST was one that we traded on Friday, and I was all over and came in long a little bit of it today and just blew it out right away. Why? Let's just go through it. It was very clear to me, this pattern this morning, and let's just review. So this was my opening bar right here on the trade on UPST. So again, this was my opening bar. See where I opened? See where my line is? That's why it's so important to understand and draw these lines accurately. I couldn't even get above this. Usually they give me above this and then they jam me down. This, they just open me right there, right? So they actually open it less than where I closed, just enough to make you think, oh, I'll hold on to it. As soon as we broke here and we broke this level, that was it. You got to go. Okay, you got to get out. And that's how I looked at it on a much shorter term basis. Now, I didn't expect this to happen, frankly. But while we're on the subject of this, do you see how this 122 level is being, I have this 122 level drawn. You see how it's being respected here? This 118 level, you see how it was being respected? And then it broke. So when these levels start breaking, 120 wasn't really even a consideration for it. It was more support and resistance. And I was really surprised that this broke 120. And we're going to run through where I think this is going. Then I just want to show you two ideas that are possible shorts. And again, this ran way longer than I anticipated, but it is what it is. So what you're seeing here is a clear break, right? Open was the high. This was the low. Let's throw in the moving averages, okay? We broke the 21-day, which we have not broken since we've been here. We're going to 105. That's my opinion of it now. I don't see how we're not going to 105, closing below 118 and a quarter. I would not be a buyer of this until we test the 105 level, and hopefully we hold 105. If not, you're going to this 50-day line. So I really, the hope is that you hold it. The way to trade this is if you're in it, then if you see a lower low tomorrow, you need to get out because you're probably heading to that 105 level. And then if you break 105, your next real level is that 50-day and 91.68. And so I'm just going to run through these two ideas really quickly here. And let me clear this stuff up. Let's remove this text and this text. This is all from the candlesticks. And let's get rid of these, all the segment lines. So I've been talking about this for some time, and people have been stating that, these are great discounts. The argument to be made about Discovery is the following. First and foremost, would it even have ran this much had this guy not been levering it up on a small float stock? So when people think that it should trade back to these levels or trade back to the 50-day, it's not going to do that just because it was there once, right? So you have to kind of take that into account. Now, here's what's going on today. I have an all-time low close since this thing got harangued, okay? And that's something that you really need to think about. Here is that support line right across here, okay? If I take out a lower low tomorrow, there's nothing here. There's nothing to stop this from heading to this 200-day, which is 32. And it's interesting that this company, Discovery, is not coming out and saying that they're going to buy their stock back in the open market. They're not saying that, which leads me to believe that they're talking to the institutions about how much of this they still have left on the books. Because why wouldn't you go out and, if your stock's of value, why wouldn't you buy it? So if you break this level, and the level really is simple. See, you can even see the 5 and the 8 here. So it's really a very simple trade. So if you break like 40.33, if you break 40.25, chances are that this is going to go test that 200-day moving average. Let's get rid of this again, and let's get rid of this, and let's just put this in. So this is Viacom. Okay, and I firmly believe that this stuff's still in the books at these firms, and they're just not being forthright. But that's just my opinion, and you can't trade on opinion. If you break this 200-day, which is just lined up perfectly with this right here, let me draw that in. Okay, so if you break this line, 39.5 is right where you're at, okay? You break through that 39.5 line, and you closed right here today, and the 200's 39.43. You break that, call it 39.25. You're going to see massive dumping of this name, massive. This will accelerate to the downside. So if you're looking for short ideas as this market sells down, as we get rid of some of these names, these are two names that would definitely be there, that I would be looking at and being short, even if you're short on the short term. But they look like they're rolling. They look like they're going to go lower. So that's it in a nutshell. I hope you found it helpful. I'm going to keep doing this in alphabetical order. It seems to be the way that people like to look at it the most. And we'll go from there. As always, please like this video if you think it is helpful. And once we get to 1,000 subscribers, I'm going to start doing some of these live, maybe in the morning, for a little bit, so people can ask questions and get set up for the day. Have a great day, everyone.